Kia's David Carp speaks at the Finished Vehicle Logistics Conference.
David has been in this business for a long, long time. He has a deep understanding of it. And what we're going to ask David to do is to give us his perspective of what's going on in the vehicle logistics market from a used vehicle point of view.
I think we've seen a little bit of a transition from a manufacturing side, especially on the daily rental market. What happened last year with the tsunami and some of the Japanese manufacturers in the short supply, there's been a big shift with the rental car companies looking at what types of cars they're going to purchase from the manufacturers. In the past, when residuals were not so great and there was like a glut of cars in the marketplace before all the domestics really got into the trouble of downsizing and getting to a right size of volume, there was a lot more repurchase units in the marketplace, meaning that the rental car companies would sign the contracts with the manufacturers for a set period of time and then return those cars back to the manufacturer, and then it was the responsibility of the manufacturer to remarket those vehicles to their dealers or independent dealers and that type of thing. But what's happened here recently is that a lot of the manufacturers, because of the high residuals and the incentives being lowered across the board in the industry, a lot of the rental car companies are going after risk units. In particular, Enterprise has always been a big risk player, but now you've got Hertz, Avis Budget, Dollar Thrifty, all shifting their business model to risk cars. And it's been very difficult for the manufacturers to try to take control of some of the cars that are going to come back so that they can remarket those cars to their dealers and supply the dealers with, viable CPO product. So what you're seeing is a big shift in the way the rental car companies are dealing with the manufacturers. So where we would usually have a lot of the lion's share of the volume, the rental car companies have the lion's share of the volume of the cars coming back after 12, 18 months, because they're actually running the cars a little bit longer, mileage a little bit higher, especially to fill the gaps when the market is shifting from, summertime, when they need the cars a lot, they'll go out and probably source some used cars. They'll also, downsize a little bit in the fall when things kind of slow down. So that's a big shift. The other thing that's growing, and I think you'll see this over the next couple of years, is that the manufacturers are starting to get heavy back into leasing. A lot of the captives, the lease penetrations have grown tremendously. I just know from a Hyundai Kia perspective that our penetration has grown from like 5% penetration 2-3 years ago to upwards 20% plus in the leasing. So our lease portfolio that we're growing is going to start maturing at the end of this year. Going into 2013, a big chunk of those cars are going to start coming back, and they're going to be hitting dealers. Hyundai Capital, which is our private label with Kia Motor Finance, is going to have to start moving those cars either to auction or try to find some kind of platform to sell those vehicles. So that's another big shift that you're seeing. Right after, in the mid-2000s, everything was APR financing, because residuals had taken a big hit because of we were in a 17 million industry, heavy incentives, low residuals, leasing became unpopular. A lot of banks got out of the business. First Unions, the Bank of America, Wells Fargo has really limited their lease portfolios, and now they're all starting to get back into it. Everybody's trying to grab some of that business because it's good business. Used car market's short supply. The used car values have been real strong. I mean, we've seen a little bit of falling off this last month, but when you're targeting whatever your forecast was and you're at 150% and you say, oh, it's softened up, well, I'm at 140% of where we should have been. So it's not really that big an impact. So you're going to see that continue to grow. And I think with the short supply of vehicles, especially with the manufacturers really limiting production just to make sure that the dealers have enough cars, limiting their daily rental fleet percentage, you're going to see a continued tightness in the marketplace. And we just had the results last night. We just closed out the month last night, and you're going to see all the headlines in automotive news today. Everybody's up. I mean, Toyota, I'm sure, I won't steal his thunder, but he has some really good news today. We were up a little bit last year, over the same time period last year, but everybody was up. And I think that the outlook is real bright. There's a lot of opportunity for, you know, a lot of people in this room to get a piece of the business as the volume really starts to come back towards the end of this year and try to find a way to move those cars.